Hello everybody, welcome back to F45 Trading for another week of market action. This week we are talking about January 27th all the way to Friday, January 31st, last day of the month. I can't believe the first month of the new year is already almost a wrap. It goes by so quick, pretty incredible. So, as you guys know, been kind of taking it easy this month. Not a whole ton of trades, just waiting for the markets to get set up, which is great. Have been a couple of great opportunities though, nonetheless, and I'm sure if you guys have been watching my stuff here, you've been taking advantage of that as well too. So I'm going to be really looking forward to February getting going here, and the market's getting some continuity back to it, and hopefully some of the pairs snapping back together in alignment, and get some correlations happening again, because there are definitely a couple of pairs right now that are a little out of whack, and I'll show you one or two of them here today. Now, I want to start off just first by making sure you guys know that we have a pretty high impact news event this week. A couple of news events this week, so just keep this in mind when you're trading. Monday and Tuesday, pretty much business as usual. Nothing too major on the horizon. German IFO business climate. We've got high impact CB consumer confidence on Tuesday for the US dollar, and some high impact Australian dollar news events to cap off the day on Tuesday. And then going into Wednesday, this is the major events here for the US dollar. We got FOMC and the rate statement coming out. So we'll see what the Fed has in store for us there. Looking like right now that they are unchanged from 1 3/4%. So we'll see if that remains right over here. You can see that. So we'll see if that remains for Wednesday or not. And then we've got, so Wednesday, big day, and then we've got Thursday, big day on the pound sterling. So if you guys are trading any of the GBP majors or cross pairs, just keep in mind Thursday, early New York open 7 a.m. We've got the monetary policy and official bank rate statements. So just watch out for that, because that will definitely move price for the GBP. And then Friday is back to sort of normal regular trading. One high impact news event for the Canadian dollar, GDP meeting minutes, and then some medium impact news events for US dollars. So, like I say, all in all, Monday, Tuesday, business as usual. Wednesday, Thursday, going to be fairly volatile, so be very careful. And then back to Friday, which we get some normalcy again. Now, remember, and after this week, and then remember next week, we've got NFP next Friday. So it's going to be, the next 2 weeks are going to be a little bit lighter trading as well too. All your trades, you're definitely going to want to be you definitely don't want to be trading the US dollar on Wednesday during that rate announcement. Not that I think it's going to throw a whole ton of volatility into it. I think we've already got established market direction and where we're going to be heading. So, but I wouldn't be surprised if they jerked price around here in a little bit. And then, like I say, and then GBP, the pound, we've got on Thursday, early morning. So just make sure you're not holding during that news during GBP rate announcement. Okay, going into the charts here really quickly. Going to keep this a short one today. We have the US dollar off to a pretty nice start for the week. At the time of this recording, it is Sunday evening, my time, about 11 p.m. New York time. So the markets have opened up and we are already moving. You can see here price is opening up fairly bullishly on Sunday going into Monday. Asian range is starting here now, and London Open's just about to happen here across the pond. So what do I think is going to happen? I think we're going to keep pushing higher up into the $98 figure on the US dollar index. So we're currently not too far away from that now, 97.65. I'm expecting continued bullishness to the upside. Now, where we go from there is we're going to have to sort of wait and see. We could certainly run all the way up to that 98.15, 98.20 level. And again, I'll just counsel you to have a look at that area here where I've got this red line and how many times price came in and came up to that area and then reversed. So that's that area right in there that I'm looking at. So that's why I want to see if they have any willingness to go higher, any strength, and we should blow through that 98.15 level and run this high here. If not, we're going to probably see them stagnate at it It could be just a one and done where they jam it up and then reverse, certainly possible, and we'll have to worry about that. Probably going to do that maybe towards Wednesday of this week if they want to push all the way up in there, or maybe they'll save it for NFP for 2 weeks from now, and they'll just keep building the positions up higher into here for the next week. I don't know what the plan is. All I know is that 98 is my figure, my target for this week, and price can do whatever it wants in between now and then. So, excuse me 1 second, guys. Bit of a scratchy throat. Now, what I don't want to see happen is, so you see here on the US dollar, I'm assuming 98 dollar figure is going to get reached. What I don't want to see is 97.40 getting tagged. We've came and worked this level in here quite a bit, and then we expanded out last Thursday, and then Friday was a nice big up day. A nice easy range in there. I don't believe they need to come all the way back down and come into this level here, so I would expect that they're probably just going to keep pushing this guy up here. They may certainly retrace a little bit. I'll go down to an hourly chart here. Like, I wouldn't be expecting, again, that's that blue line there that I was talking about on the daily, 97.40. Don't want to see them come any lower than that. They could certainly come back down and maybe want to rebalance off of this consolidation level in here. Couple of even lows under here, so they may want to come back down into here and then go higher. Certainly expected movement if they decided to do that, but I also wouldn't be surprised if they just kept right on shooting right on up, because they got a target to meet. And I think there's a very likely chance they're going to meet that by up into here by Wednesday. So that's what I'm going to be looking at. And so if we're bullish on US dollar, we're going to be bearish on EurUsd. Same result, EurUsd. We hit these highs way up in here as after we swept all these guys in here, failing to get above this high. And then price has steadily fallen down. Don't need that there. Steadily fallen down ever since. So, real big breakdown. If you look at this, this is a nice kind of head and shoulders pattern right in here. You can see that. I'm sure you guys can see that without me having to do this. There's a shoulder, there's a head, there's the other shoulder, and we broke down. Retail indicators at its finest right there. Just so you know, I don't use these types of things to predict price. And now we're back down here, and we're kind of chugging along in here at this previous consolidation level. So what I would like to see, again, very similar on the US dollar. If the US dollar wanted to give a little bit of pullback, I would definitely like to see that. Same thing with EurUsd. I'd like to see a little bit of a pullback coming in higher, but again, I would not be surprised if they just dropped price very aggressively. Now, the other thing they could do, because the GBP or the pound sterling has that monetary rate news event, one of two things. They could consolidate this pair a little bit and just kind of chop it sideways for a bit, and then when that US dollar releases the numbers, then fall off. So just bear in mind, it may not start falling here going into Monday and Tuesday right off the hop, but if they start breaking this low here from Friday, then I think that's a pretty good trigger that we can put the sells on and put the shorts on and at least target the 190.80. Now, I would probably suggest that we can target a little bit lower than the 190.80, and definitely not very far away. I mean, we're only talking about 50 pips from current location, so certainly this is not anything to write home about. Just a nice, easy setup that I'm looking for. Now, what I don't want to see is price start to trade all the way back up into this range up in here. So if we start going higher than, let's say, like this low right in here, if we start chugging higher than 110.65, again, not very far from here, it's only about 30 pips, 35 pips higher, certainly could trade up to here. I just don't want to see any daily candle close above this level right there. That's my line in the sand. So as long as the daily candles are not closed above this and we're not up into here, we're going to remain bearish on this, and I'm going to be targeting 190.80. And to be honest with you, I'll probably be targeting a little bit lower, 190.60, level, maybe even if we want to run lower than here, we can look at that. But I don't want to get too aggressive on the drop, because I do think it is very highly probable that the US dollar could come out and peter out in here and then run lower. Because if you look at the overall trend, right, the trend is your friend. What are we doing here? We came up, created 2 equal highs, dropped, big aggressive drop, came back up, rallied, nice big bullish rally, and then failed to get higher. 1 weak little rally in here, and then dropped down one more time, and then we saw price rebalance as I called underneath these lows here. Now if you look at the US dollar, there's lots more levels just like that all the way under here. So how bearish do they want to get? Well, we definitely broke this price structure in here, and we could come back up. If, again, we get higher than here, we're bullish, and then we can target those highs here. But I have a bit of a, and hey, maybe in February, March, April, maybe we will be trading up here. You know, I'll certainly, you know, be open to that prospect. But I think that the likelihood is going to be that they're going to at least come back after they hit this range here, at least come back down and retrace a little bit before they climb back up there. Like, it's not going to be a straight shot up. So, you know, we can worry about that when it comes. But what I'm saying to you guys here is chances are we're not going to take out this low here on EurUsd. Because if that would be the case, then I think we'd be all the way up here and maybe even up here. So the euro, my prediction is we will take this low here, 109.80, probably go lower, maybe 109.60, which I have on the chart. Oh, I don't have that on the chart. My apologies. I thought I did. 109.60. I believe we'll probably get down to 109.60. And that is just basically coming back down into this consolidation range here. And then we'll probably reverse from there and go higher after these levels here are cleared out. More than likely, I think that will be what the scenario will play out as, and they'll probably take their time getting down there. Okay, and only because the pound sterling has that high impact news events. Whereas you can see here, EurUsd had some nice expansion last week from their monetary policy release, and I think they're going to start moving the cable instead of the fiber. Okay, what I mean by that, EurUsd obviously is the fiber, and GbpUsd is obviously cable. Just in case for anybody joining us now, you didn't know what those acronyms meant, that's what it is. Which brings me into the GbpUsd, pound dollar, or the cable as I like to call it. We've got price consolidating quite aggressively here. A lot of people are going to come in and say, hey, this looks like a nice wedge formation here, or a nice ascending triangle, or a, you know, whatever you want to call it. Again, not looking at anything like that. I'm just strictly doing this on the numbers and what price is. I believe we had a nice little run in here. So price came up, hit the highs here. We're not going to challenge these highs anytime soon. It may be on its way to going up there, but it's going to take them a little while to get all the way up here. So we're not going to concern ourselves about this high yet. But I will just draw a line out in time so we can have it on our charts for now. Price ran all the way back down, back into this consolidation level right in here. We can see that rejected, popped back up, and then failed to get above here. So this is fairly bearish when it does that. Price ran all the way back down again, and we've just been consolidating and hitting this. It's a fairly big range, don't get me wrong. You know, from these lows up to these highs, you know, it's 100 and, sorry, I missed that. That was 190 pips, I think. Call it 200 pips. Yeah, we're about a 200 pip range. So certainly there's definitely lots of pips to grab in here. But you can see we came up, dropped down one more time. We're just failing to get underneath these lows here. So this is obviously the support level, right? Price is not going to go below there. So everybody's getting long and they're stacking their stops up right under here, only for them to come up, do a very, very brief rally, and then reject. And guess where they're going this week? Right here. Now, my question is, are they going to get underneath this low? That I don't know. So I'm going to put a price tag out on the chart right now. These lows here come in at 129.55. So we'll call it 129.30 on the downside. That's my target. So we are currently 130, call it 60. So we're about 130 pips away from that low right now. I think we're going to take these lows out. Do we take out this guy here? This one I don't know. I'm certainly not going to be putting any positions on this in anticipation for it to run these lows out. But I definitely believe that these lows here are going to be targeted. So that's going to be the trade setup. Now, very similar to what the US dollar and the EurUsd, I guess. I'd like to see a little bit of a retracement before we get down in there. Namely, I just kind of want to see them come up a bit, couple of pips, 20, 30, 40 pips, and then start dropping down. That's what I'd like to see. But here's the thing, and this is the kind of thing that has me looking between EurUsd and cable. So typically what happens, and you can see in EurUsd, last week we had the monetary policy statement on, I believe it was Thursday of last week. What did this big candle right here, that was the monetary policy statement, or monetary policy release, interest rate release, whatever you want to call it. What did they do before that? Consolidated after a big drop from the Friday previous week. Monday, Tuesday, Wednesday, Thursday, Friday, Monday. So they consolidated before that interest rate announcement. Does the GBP, USD, pound dollar, cable, whatever you want to call it, do the same? Do we sit here and bank around in a very small, tight range pre-interest rate decision? That's going to remain to be seen. What I don't want to see them do is go higher than last Friday's candle, which is right here. I do not want to see them go higher than that. And that comes in at 131, call it 75. Don't want to see them go above that. I believe they're going to, let me make my life easier here. 131.75, that's my line in the sand. If we go higher than that, then they're not going to take these lows. I mean, really, they're going to just go bullish, and we'll probably take this high, take that high, and we'll go from there. However, I think that these areas in here are just too good to be true. So, we could be back up here trading here this time next week, certainly. But I think before they get there, 129.30 is going to get tagged out. At least 129.40 for sure to the downside. So that's my prediction. But like I say, I'd like to see them retrace a little bit. 130.90. If they could come back up and rebalance off of the Thursday low at 130.95, that would be nice too. So that's what I'm looking in there. Just price to come up a bit, drop, and then that's our target. Okay. EuroGbp, and again, another reason why I believe this is going to happen. Again, if they consolidate, I don't know, or drop down, I don't know. Does EurUsd do the same thing? Do they allow EurUsd to release for the next couple of days and then tighten it back up with the US FOMC statement? Again, I don't know. We'll have to wait and see. But I just got to call out the levels and wait for them to get there, because I believe EuroGbp is going to move higher. At least, long term, we could certainly be lower. Long term, this is a weekly chart I'm looking at here. This isn't a daily, this is a weekly chart. So if this goes down, GBP, Euro goes down, excuse me. If this goes down, Euro goes down. So that's why I'm thinking that Euro here, we're going to see a move down into this range here. Okay, if this, where am I looking here? EuroGbp goes up, obviously that's bearish to EurUsd, but bullish to GbpUsd. So I think ultimately we're probably going to come back up and run these highs in here. Again, long term, we could be bearish underneath this low here. But you look what they did. They came all the way back down under these equal lows here and rejected quite aggressively. I believe we're probably going to see upside on this first before it starts running lower. I could be wrong. But you can see this candle here, pretty definitive rejection. And I think we're going to probably trade higher. So now, do we get above this red line here at 0.8490? We'll have to wait and see what happens this week. But certainly, I believe as we push higher, this will drop EurUsd, and they could consolidate this guy here until that monetary policy news statement, in which case it might come all the way up here, and then they'll drop down here, and away we go to the races. So also, if this is going to run higher, this is going to be bearish for pound dollar. GbpUsd, which is why I think they're going to drop it into here. So just a couple little nuances there in terms of correlating pairs. So okay, real quick, UsCad. We've had a big breakout on UsCad. This pair here has been driving me nuts, as you're all probably well aware. I haven't been trading this very much. Now we've finally seen price breaking out as the US dollar is going to climb up into here. UsCad, where is it, will in turn also climb up into here. Now how much strength do we have on that move from US dollar to cascade UsCad up? Do we come all the way up to 133.30? These old highs in here? I hope so. That would be a very, very nice run, but you can see, how long it took them to get all the way down here. We had one big candle up here, so I'm not anticipating great things for UsCad, but I'm going to keep my eye on 133.30. Excuse me. Because again, I don't know if they'll get up there this week. That's about little under 200 pips away. Certainly you could get that in a weekly range on UsCad. So this was last week's range. You can see from its low to a high, that was 130 pips. So it's probably pretty unlikely that we're going to reach 200 pips plus on UsCad in 1 week. But if we get that massive fluctuation for the FOMC statement on the US dollar, anything's certainly possible. So keep your eye on this level up here. I am expecting higher prices on UsCad. I doubt they'll go back down below this low here from Friday. They'll probably just keep moving up. So really, as long as they keep this low intact here, again, that they don't trade below this low here, then I'd be a buyer of UsCad. And UJ, or USD yen, had a nice fall off here. Now again, uncorrelated to what the US dollar is doing. You can see US dollar pushing up. US yen should also be pushing up, and we had this big rejection from last week. So, and then a big gap down to start the trading day here. Now this obviously could be due to what's going on around the world right now with all of these crazy illnesses happening. I'm not going to get into any of that stuff today. I'll save that for a later date. But if the US dollar is pushing higher, this should be the gap down. They should close this gap and want to continue to push higher. I am looking for 11100 to be taken out. Whether they can do that on this push or not, I don't know. But that's, again, 200 pips almost on the mark. You can see that gap open on Sunday right there. I'm anticipating this to get filled here. Certainly, and I don't think they'll go below this low, to be honest with you. As long as they stay above this low right there, you can see that. I'm going to remain bullish on US yen. If they go below here, then I don't know, they may want to try to trade back down into this area here one more time. But I think this looks pretty bullish, and I'm anticipating higher prices on US yen. So Australian dollar, real quickly, going to wrap up the Forex with this guy. 0.6780 is my target on the week. Not very far away. But I think we're going to probably push higher. You see this big gap right here from last week? I believe we're probably going to trade higher on Australian dollar before it fills. Excuse me, I said before it fills, before it hits this level in here. Not very far away. That's about 40 pips, so I don't think we're going to get massive ranges on Australian dollar. Now, that being said, I do have a low rate here that they could want to, and I'll bring this out in time here so you can see it a bit better. If the US dollar really wants to start moving and they want to really drop Aussie, you can see we've hit this low here. Price came all the way back up, came down, hit it again. I'm expecting a little bit of rejection and some move higher. I'm not expecting to move back up into this consolidated range in here. I'm expecting them to stay under this level, this 0.6820. If we do come back up and trade and fill this little gap in, I'd be bearish on that, and I'd be shooting for a profit of a take profit of down to 67.80, decimal 6780, and possibly leave some on. I would take the bulk majority off, possibly leave some on if it does actually indeed want to run down to 6740s. So you know, certainly could be a nice trade on Australian dollar. This thing's been trading very, very beautifully the past little while, so keep your eye on Australian dollar, because I think if it continues to trade as it has, which has been very, very easy, very stress-free, it'll probably continue to do so. But I definitely don't want to just sell it from here and hope for 20 pips. That's not what I'm looking for. You know, 20 or 40 pips down into here. I'm looking for a retracement higher and then a push lower is what I'm looking for. Okay, that's it for Forex, guys. I want to talk really quickly about crude oil, because not sure if you guys remember, but I've been calling this level here since I don't know, September of last year. They didn't take it on this run down here to get under there, and then they reversed and came up and ran all those stops. Well, guess what they're coming for, folks? And I told you it was going to happen, and look how aggressive they've sold this. This is a weekly chart again. You see up here, weekly chart. 1, 2, 3 weeks straight down. Now, here's the interesting part, and I'm not going to spend a lot of time on this. Every time you saw a big push in price, big push up in here in price, big push up in here in price, it's been attributed to some sort of Middle Eastern news. You know, some missile strike, some terrorist attack, some whatever. It's always propelled price higher. Well, if you didn't look at the news on Sunday, maybe just go over and look at what happened over in Iraq. Somebody just attacked the U.S. embassy, probably from Iran, more than likely. They shot 4 or 5 missiles at the U.S. embassy in Iraq. And this, again, coincidentally happened on a weekend, as it always does, right before price open. And what did price do? Gaps down. What is the deal with that? I mean, again, like I say, you look at all the areas where prices gap. Look, this was that big attack where the U.S. launched those missiles and killed that general from Iran, and then price steadily fell off from there. I mean, I could go on and on this. I'm not going to do that. But look what they did. They gapped it down. If there was ever a case building for them to run under these lows, I don't know what else to tell you guys, because that is the opposite effect of what should have happened with those missile strikes. Now, they're going to come on and say, oh, it's about this coronavirus, and oh, the demand for manufacturing and crude oil is going to sink because of this. I'm going to tell you right now, that is all garbage. BS. Do not believe the media when they say, or any oil experts that come in and say, oh, they're selling into oil because of this coronavirus. And trust me, supply does not build up that quickly. And you know, entire countries don't shut down that quickly manufacturing to affect crude oil like that. It doesn't happen. I mean, it would take a lot more than something like that to happen. And again, you know, these missile strikes just further go to destabilize the Middle East, and which is the major area where most people get their oil from. Prices should be going up, not down. So anyway, enough about that. They may not even fill this gap, just so you're aware. If they do, I'm watching for it. I want to see them come up and fill the gap. I'm going to sell into that, and I'm looking for under $50. Like, look at this. From this high came in at $65, and $65 on January 8th. $65. Price was at 3 weeks ago. They have sunk this thing $13. I mean, it's just unbelievable, the amount of pressure they're putting on this guy. Anyways, that's all I'm going to say about this. I want to see the gap filled. I'm going to be selling into it. They may want to run a bit higher. So just an FYI, they may want to come up possibly and rebalance at Thursday's low. I'm going to put it on the chart just so you're aware, just in case price does shoot up to 54.80s. You're not like, whoa, what's going on? This thing's going to turn around and go bullish. It's not. We could certainly see a reversal and price could retrace, but it's not going back up and taking out this high before it takes out these lows. These lows will get hit. And then when these lows get hit, I'm going to wait, be patient, and see if they want to go back above. And if they do, that is going to be a long, all over a long. Okay? So that's all I've got for you folks. I hope you were able to have a great week this week. Take it easy. Again, FOMC Wednesday. FOMC interest rate release on Wednesday for the US dollar, and official bank rate statement for the GBP or the pound sterling. So just take it easy. Monday, Tuesday should be good. Wednesday, Thursday will be volatile. Friday should be back to normal again. Okay, so for all the members, I will check you in the chat room tomorrow. And for everybody else, you can reach me by subscribing down here at f45trading.com. Go to my website, check it out. Please click down here and subscribe to my YouTube channel if you haven't yet. Give me a thumbs up, give it a like, give it a comment. Let me know you guys are watching. And I just want to say thank you very much for your time. And we'll catch up to you guys next week.